Hey, what's up, my new Standard Nation? It's your host, TJ, with Strategic Real Estate Experts. And today we're going to talk about two different types of loans. The first one is, what is an FHA loan? And then second, we're going to hit on, what is a VA loan? So first, when we look at the FHA loan, it's typically referred to as the first-time homebuyer program loan. Now, you don't have to be a first-time homebuyer to use it, but it typically is because it is as low as a 3.5% down loan program. So it's great for people that don't have tons of cash on hand. So the caveat obviously is to that is there's cheaper options out there if you have more money to put down. But obviously the more risk, the more costly it will be for a lender. Like we've talked about previously, like if you're going to put 20% down, that's less risky to a lender than if you're putting 5% down. So there's more costs or fees sometimes with some of these lower down payment loans. The other trick with the FHA loans are there are loan limit amounts, and it's based on the area that you live in the country. So again, if you're in a huge metropolitan area with super high prices, that FHA loan limit is higher. If you're buying somewhere rural, way out in the country, well, it's probably going to be lower. So you need to understand what those loan limits are and how high you can go if you're pushing that FHA loan limit max for the area that you're in. This is a great loan program for somebody that maybe had a bankruptcy in the past. Maybe you have some credit score issues that you're working through to try to get that up higher, because FHA, the credit score limit or minimum, I believe it's like 580. Now, that doesn't mean every lender will do it. If your credit score is 580, you have to find a specific lender that would do that. Now, there's not a whole lot of them that will, because that is super risky for them. But typically, if you can get into 620, 640, 680, you'll qualify for an FHA loan with some lenders. Now, they all can set their own standard for what that score has to be. But FHA loans, great first-time home buyer program. It's good for people that are even buying second or third houses. It just depends on your specific situation. If you have more money to put down, stuff like that, you're probably not going to do the FHA loan, because sometimes you'll have a little more in closing costs, maybe more in an interest rate. It just depends on your specific situation. Now, next we have what's called is a VA loan. So it's a veteran loan. It's a loan for active and past military members serving our country. So lots of things with it. Some cool stuff with it is obviously it's no money down, so you don't have to put a down payment down. And the big one is no mortgage insurance. So if you don't have mortgage insurance, that can add on a $200,000 property anywhere from $90 to $125, we'll say, per month on top of your mortgage. So a VA loan, for those of you that are veterans or active duty, super good option. The thing to know with the VA loan, though, they do have a funding fee, which can be a couple percent. And if you're actually a reservist, it's even a little higher than the active military. So you really have to weigh what your options are if you're going to have to put a large funding fee down. So I'm super broad here because everyone's situation is a little bit different. But a VA loan can be a great option. You can use it on your first time buying, your second time buying the house. The VA funding fee goes up a little bit, so it makes it a little more costly. So again, it depends totally on your situation. Just trying to educate you guys on a couple of the loan options out there that are pretty big and prevalent right now. If you have more questions about them, want to know how to put you and your family in the best position possible, check out knowbeforeyoubuy.realestate.com. You can always call, text, or email me, 608-576-0044. Emails TJ at sreehelp.com. Don't forget to raise your standard, and we'll talk to you soon.